Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to look at today accounting, focusing on paper 2. So if I look at the format of the end of the year examination, this should not be unfamiliar to you because you've already written a prelim exam, but we're going to go through the steps. So if I look at the formation of the paper, it consists out of 2 disciplines. Discipline 1 focuses on financial reporting and evaluation. If we look at discipline 2, which is paper 2, which we are going to focus on today, it focuses on managerial accounting, internal auditing, and control. Both papers consist out of 150 marks, 120 minutes. Questions can vary between 3 and 5 questions. Very important, all of it is compulsory. You cannot leave out any questions. So if I look at ethics is incorporated into both papers in all the different topics. So you need to make sure that you study your ethics. Internal control is integrated into all the different topics, which we are going to look at a little bit later on, and this is the focus in paper 2. If I look at financial indicators, it applies to both papers. Very important. Yes, a formula sheet will be provided, but you still need to study your financial indicators. You need to be able to identify which financial indicator to use with which question. You need to be able to comment on that. So make sure that you study your financial indicators. If I look at the financial indicators, these are the ones that you need to know for discipline 1, paper 1, and for discipline 2, paper 2. When you study for paper 2, make sure that these are the ones that you focus on. That will be incorporated into the different topics. So if we look at the content of paper 2, these are the topics that you need to study. We are going to look at each one individually now. We're going to start with the reconciliation. So if we look at reconciliation, what is expected? You need to analyze, interpret, and complete the reconciliation with regards to bank, debtors, creditors, and then we also completing the age analysis. Now, if I look at bank for this year only, it will not be examinable. So do not study it. If I look at creditors, there are 2 different types of recon with regards to creditors. So the first one is where we get a statement from our supplier, which is an external source, and we need to compare it to the creditor's ledger. The second type of recon is where we need to look at the control account, and that should be equal to the creditor's list. The same applies with the debtors. Debtors, we focus on the control account must equal the list, and then which is new to grade 12 is the age analysis. So this is a question asked commonly in exam papers. Why should the creditor's list be equal to the control account? So if I look at this, from the journals, we post to the control account, and from the journals, we post it to the individual's account. So if we've done this whole process correctly, it means that the control account must equal the list. When we do this type of recon as well, I can look at this as a checklist to see what is it that I'm supposed to do. For example, if we made a mistake in the journals, it means that we need to correct it both places, in the control account as well as the list. If we made a mistake posting to the individual's account, we're only going to correct it in the list. So just use this as a checklist, basics, how to approach the reconciliation with regards to debtors and creditors. If we look at reasons for differences, this is again a checklist for you. Make sure that you study it, go through each one of that, and make sure that you are able to do an example, a transaction, knowing what is the procedure. If we look at the statement received from the supplier, just some basics that we're going to go through. We always compare the month-end balances. And from our perspective, we are buying on credit from our supplier, so they are a liability. But from their perspective, they are selling to us, which means that from their perspective, we are a debtor. And this is very important to remember. Why? Because when we're completing the debt creditors reconciliation, it is from their perspective. If I look at, again, this is a checklist with some reasons why there's differences. Make sure that this is what you study. Do an example of each one of that. Know what is the procedure in doing a transaction. For example, if we've posted it to the wrong individual's account. If I look at some transactions, and these are ones that learners sometimes find a little bit more challenging. So if we look at the first one, Tembeka suppliers also purchase goods on credit from Ikazi Traders. Ikazi Traders has transferred a debit balance from the debtors ledger, journal voucher 585. Tembeka suppliers will include this on the next statement. So by looking at this now, there's the journal voucher, 6,400. What is happening in this transaction is they are buying from us. We are selling to them. So if they're buying from us, it means that they are a debtor. So what we've done is we've transferred now that debit balance to the creditor's ledger. If we make a change to the individual's account, we also need to make a change in the control account. So this is now saying that we owe them 6,400 less. What they will do now on the next statement, it will reflect that they're going to credit our account 6,400 because we owe them 6,400 less. So instead of us paying them, they paying us, we are just going to make these entries in our books. Looking at the next transaction. The transaction on the 24th, there's the 24th, is for merchandise return to Tembeka suppliers. Know your basics. When we return goods to our suppliers, it means that we will issue them with a debit note. Once they've processed that transaction, they will issue us with a credit note. So in our books, it should appear on the debit side. So now if I go to the 24th, I can see, but there's no entry on the debit side. We've incorrectly recorded it on the credit side. So what now? This is a typical example where we've incorrectly credited the account. So to fix this, it means that we will need to take it out. But to take it out, we will only cancel the transaction. We still need to show the goods that were returned to our supplier. So when this happens, we always times it by 2. Make sure that you know what effect will this have on the balance. This will have a negative effect. If we go through now debtors age analysis, the word debtors means they owe us. Age, we look at how long. Credit terms, we refer to 30 days, 60 days, 90 days. And then the analysis gives us a breakdown of the debtors account. 2 golden rules. Always remember when we're looking at age analysis, oldest debt is paid off first. When goods are returned, it will always be deducted from the most recent purchases. And this is very important in a business, because if I don't take it off the oldest debt, if payments is made, I'm going to end up charging a customer interest for debt which is outstanding, and we actually made a mistake by not taking it off the oldest debt. If I look at age analysis, this can be incorporated into different topics. And the first one that we're going to look at is the creditor's reconciliation. So if we receive a statement from our supplier, on that statement, we will have an age analysis which tells us what is the debt outstanding for 90 days, 60 days, 120 days plus. So what happens in this example is I first need to correct the statement, do the reconciliation, and then after we've done that, we need to draw up a new age analysis. This can also be incorporated into budgets. So with budgets, they provided us with an age analysis. They told us the credit terms. What is the outstanding balances for 30 days, 60 days, 90 days, 120 days? So what we need to do now is look at what percentage is not or not adhering to the credit terms. Always take note. Age analysis can either be asked by completing an age analysis, like the example given here with the creditor's recon, or you need to analyze an age analysis. And there's always two things that we look for when we're doing it in this format. Is we look at, does any debtors exceed their credit limit, and which percentage does not adhere to the credit terms. With debtors, with creditors, make sure that you study your internal control. If we look at common mistakes, learners do not show calculations in brackets. In accounting, and this is applicable, paper 1, paper 2, if you don't show your calculations in brackets, if the final answer is correct, you get full marks. But if your final answer is wrong, you lose all the marks. You can earn part marks for showing your calculations in brackets. Then we calculate the amounts correctly, but we do not know what effect does it have on the balance. So if you're not sure, use T accounts as a tool. T accounts is your friend. So on your paper, just indicate debtors is an asset, plus on the debit, minus on the credit. Creditors is a liability, minus on the debit, plus on the credit. So if I credit, for example, creditors control, I know if it's credited, it means that the balance will increase. So use the T accounts, it's your friend, if you are not sure. If I look at internal control over debtors and creditors, and we're specifically looking at debtors, existing debtors, if you are asked, how can we improve the collection of debtors? Do not say screen your debtors. We are talking about existing debtors. How do we collect that money from the debtors that's already in our book debt? If there is no change to the control account or the individual's account, indicate a 0 or no change. Don't just leave it open blank. Otherwise, you're not going to get the mark. When a debtor's or creditor's account is wrongly debited or credited, we've shown an example, it is always ×2. A debtor with a credit balance needs to be transferred to the creditor's list. It will always have a positive effect on the balance. The same as when a creditor has a debit balance, it means negative. We need to transfer that to the debtors list. Then it means it will also have a positive effect. This is a common mistake. And this type of adjustment is always asked or sometimes asked as part of paper 1 as well as a year-end adjustment. Be aware of this. We often get the plus or the minuses wrong. Then, if returns are overstated, it will always have a positive balance. We tend to think, well, overstated means I need to find the difference and I need to minus it. Remember, this is a return, so we've overstated returns. That will have a positive effect on the balance. Be aware of this type of adjustment. The next topic that we're looking at is VAT. Now, what is expected of VAT? You need to know your concepts. What is input VAT? What is output VAT? Input VAT is VAT paid on items purchased. When we look at output VAT, it is VAT collected. So when we look at this topic, they tend to ask grade 12 level, what is the amount payable to SARS or receivable from SARS? Always incorporated into this question is FX based on real life scenarios. So you need to take the basics that you've learned with regards to FX and you need to be able to apply it. So the first thing which is very important with that is knowing your calculations. What does it mean when we talk about VAT inclusive? It means that it's the amount including VAT. What does it mean when we talk about VAT exclusive? That is the amount excluding VAT. Because you will be asked to calculate VAT when they provide you, for example, with the amount including VAT and the amount excluding VAT. So when we calculate this, it is always what do we want to calculate over what has been given to you. If I look at the VAT control account, this is a tool that I can use, or you can use your VAT input and your VAT output. When they just ask you to calculate amount payable or receivable, it's up to you how you want to get to the answer. If you just want to add or minus, 100% correct. But if you are not sure, you can use a T account. Just make sure it must appear on the correct side of the account for you to earn the marks. You can't swap them around and expect that you're going to get the marks. With that control, a debit balance always means receivable from SARS, it is an asset. A credit balance means that we owe SARS, so that is a liability. Example of some transactions, if we look at this question, you are required to calculate only the VAT amount. So they've given you excluding VAT and including VAT. So I'm just going to focus on this last transaction, invoices issued to customers. Now, if we look at the additional information, they said to us, this includes sales for 9,200, which should have been sold at 0 rate. So let's stop there for a minute. What is 0 rate? It means VAT is charged, but at a 0%. So what they've done now incorrectly is they've calculated VAT 15% on that item, and they've given you the amount 1,200. So there are different ways in which we can get to exactly the same destination. The first one is we're simply going to say the total amount including that minus the 9,200, so we're taking it out of the transaction, out of the equation, and then we say we want to calculate the VAT, which is equal to 15% over 115. Why 115? Because that is the amount including VAT. A second option is we're going to say, right, the VAT amount payable to SARS is 20,700. So all we do now is we subtract that 1,200 which was incorrectly added. We will get to exactly the same answer. So again, in accounting, as long as we get to the same destination, you can choose whatever method you want to use. Looking at ethics in VAT, this is now an example. The internal auditor discovered that Amatle has been underpaying the amount due to SARS in respect of VAT at each submission date. On inquiry, Amantla stated that she has used the money to pay business expenses and adjusted the payments later. Comment on this practice and give Amantla advice. So immediately when you see this, red light should go off. Why? Because number one, we collect money if we are a VAT vendor on behalf of SARS. It's not our money to keep in the first place. So we can't say, oh well, I need to keep my business running, operating, so I'm not going to pay SARS now because I need to pay X, Y, and Z. So when we look at this, we now need to comment on what is incorrectly done there. It's unethical to use the money not earned by the business to pay the running cost, the operational cost of the business. The business acts as an agent on behalf of SARS, and bi-monthly, every second month, we need to complete our VAT returns and pay that money over to SARS. The business could be fined or penalties could be given to the business for non-compliance. What we can also say is this is rolling off cash, and this could escalate to a serious problem. So once you've now identified that, you need to give advice. And some of the advice that we can give here is keep proper record. Ensure funds are available to make payments. Only use the business funds to cover business commitments. So again, this is just an example of how they can ask ethics with regards to VAT. So my advice to you, the more papers you work through, the more you come across these type of scenarios, and you need to practice them. Looking now at the next topic, manufacturing. And what is expected of manufacturing? You need to know your manufacturing concepts. The production cost statement and the notes, and a bridge, which is a short form income statement. And then analysis and interpretation of cost information using unit cost and the break-even point. So what is important, fundamentals when we talk about manufacturing, is know the cost accounts. Know the different stock accounts and what is the purpose. Know the format of the production cost statement. If I look at the break-even point, and we're going to go into more detail a little bit later on, know that there are different ways in which the break-even point can be asked, and you need to understand how to comment on that. If I look at internal control and ethics, this is very important. Make sure that you study it, that you're able to apply it. For example, if I say to you the business decided to sell the products at the same price but using inferior quality of materials, is that ethical or not? This is just an example of how it can be incorporated with internal control and ethics. If we look at cost effects, remember there are 5 cost accounts, and that can be divided further into fixed cost and variable cost. You need to look at the cost effects, identifying if there's an increase or a decrease and how we can manage that. If I now just have a quick overview of my different cost accounts, there are 3 different departments in manufacturing. It's our factory department, administration department, and selling and distribution. So we need to, in manufacturing, we need to sort out all our expenses into those different cost accounts. So if I say to you, the business bought a new equipment, that is an asset. We are not going to sort that into a different cost account. But the depreciation that we calculate on that equipment, that is an expense. And that expense needs to be sorted out in either the factory department, selling and distribution department, or the administration department. Remember, in manufacturing, all expenses is closed off to the different cost accounts. If I look at my production cost statement and the notes, as mentioned before, this is easy marks to get. Know the formats, especially with this topic. It's about filling in the information which you've got and finding the missing information. So if you don't know the basic and know where it's supposed to go, how are you going to find missing figures? So make sure that you study the formats. It's easy marks to get. If we focus for a minute on direct material cost, remember I said to you, there are different stock accounts and each one has a purpose. In grade 11, you've learned the ledger accounts, the raw material stock account. That is your direct material cost note. Why? Because we look at the balance, our opening stock. Did we buy any stock? Was there any returns? And what do we calculate in this account? The raw materials that is issued. Your raw materials issued is equal to your direct material cost. I want to also point out the following. If stock is stolen or damaged, and that happened before the physical stock count, we will subtract it from the net purchases. But if that happened after the physical stock count, you need to subtract it from the closing stock balance. Please read the adjustment carefully with regards to missing stock. Did it happen before the physical stock count or did it happen afterwards? If I look at the direct labor cost, again, all expenses is closed off to the cost account. So what goes into the direct labor cost is only the gross plus contributions. That which is deducted will go to the fund account, which is a liability. What we owe our employees will go to creditors for salaries and wages. That is a liability. What we care about is all the expenses. So we only look at the gross salary plus the contributions. So if they provide you with the net salary, it means that you will need to calculate the gross salary. Please do not put the net salary in. That is after the deductions, what we owe our employee. If we look at the factory overhead cost, this is the note. They tend to normally ask us calculate the factory overhead cost. They don't need to give it to you in notes, and that goes actually for all of these, even with the direct labor cost. So just be aware of it. If I look at the cost of finished goods sold, this is not often asked as a note, but many times we need to use it. Why? Because if they, for example, provided you with the sales and a markup, it means that I will need to calculate the cost of sales. So if I've got the cost of sales, then possibly I will need to work my way back, solving the cost of finished goods produced, and then I can complete the production cost statement. So just be aware, this is not often asked, but many times we need to complete this to find missing figures or find the information to complete the production cost statement. If I look at the administration and the selling and distribution cost, it does not form part of the cost of finished goods produced. So we do not take it to the work in process stock account or the production cost statement. This will be closed off to your profit and loss account, and that will end up in your income statement. If we now look at the break-even point, how many units should we produce and sell to break even? We're going to look at a calculation in a minute. But when we're commenting on this is sometimes a problem for many learners, and it's actually easy marks to get. Why? Because when we're commenting, we quote figures and we compare. We compare last year with this year. So how do we comment on this? We can look at last year, the break-even point, compared to this year to see if it increased or decreased. We look at the number of units produced last year compared to this year, and then we look at the break-even point and the number of units produced to see, are we breaking even? Are we making a profit or are we making a loss? So I always say when we comment, we look at it, break-even point, number of units, and then we compare those two with each other. Different ways in asking the break-even point. One, they can ask you, how many units, additional units, do we need to produce to make additional profit? So example, the number of extra donuts that must be produced to make an additional 15,000 profit. Again, there are many different ways in which we can get to exactly the same answer. So I'm going to show you a quick, easy way. When you get this type of break-even point, we look at what is the additional profit divided by the contribution per unit. So how do we get the contribution per unit? We take the selling price per unit minus the variable cost per unit. So this is simply taking 15,000 divided by 3. It means that we need to make a 5,000 additional donuts to make a 15,000 profit. Another way that they love asking this is to prove the break-even point. So to prove the break-even point, we just take the fixed cost, and it's always the total fixed cost divided by the contribution per unit. So in this example, don't get caught out. They've given you the fixed cost per unit. So I need to times it by the number of units first. And then I can divide it by the contribution per unit, which is my selling price minus the variable cost per unit. So these are the two different ways in which they can ask it. Make sure that you familiarize yourself with that. Looking now at some additional notes, ways in which they can ask it. Know how to calculate the correct factory overhead cost. They sometimes ask us in paper 1 as well, where they say calculate the correct net profit. When they ask you in this way, you only add and subtract the additional amount. You don't take the total over the period of time. They can ask you cost accounting and incorporating valuation of stock. And we're going to look at that later on as well. So when we talk about the way in which we evaluate our stock, they can use specific identification, FIFO, which means first in, first out, or weighted average. So here's an example where they've looked at the finished goods, and the way in which we evaluate our stock is using the FIFO method, which means first in, first out. So if we look at this now, and the type of question they can ask is calculate the gross profit earned on sales of shirt. So what do I need? If I want to calculate the gross profit on sales, I need cost of sales. So we need to find cost of sales. And in manufacturing business, we said earlier, To get the cost of sales, we need what? The finished goods stock account. So it's all about filling in the information which we've got and finding the missing information. So what do we have? We've got the balance in the beginning that was given to us. We can calculate the cost of finished goods produced. That was given to us in the information. We can calculate the balance at the end by using FIFO, which means first in, first out. Why am I not using the 380 Rand? Because the older stock would have been sold first. So when we value our stock, it will be at the most recent prices, and that is the 420. So now we simply take the debit side minus the credit side, and that equals the cost of sales. Once we've got the cost of sales, we can calculate our markup percentage. How do we calculate that? Sales minus cost of sales divided by cost of sales, and percentage is always out of 100. Another way of getting to exactly the same answers is by completing a T account, trading account. So I'm incorporating inventory systems to solve this. What do? We take sales, which is given to you. We've got the opening balance. We can calculate the working process. So now we need to solve the closing stock. Now we can just take the credit side minus the debit side, and that will equal the gross profit. Again, I need to calculate the percentage markup, so I still need the cost of sales. So from this, I can actually get the cost of sales. I can just say, well, sales minus gross profit equals cost of sales. Or we can say opening stock plus work in process minus the closing stock. So if you understand the basics in accounting, there are different ways to solve getting to exactly the same answers. If I now look at, be aware, and I've mentioned this before, if they give you the markup percentage, it possibly means I need to calculate the cost of sales. So a hint, complete the finished goods stock account. Then, if the number of units produced per year is given and the unit cost, you need to calculate the cost of finished goods produced. We've touched on this before. If I've got the total number of shirts, I'm going to times it by the unit cost. So this is an extract now of the production cost statement. What can I solve? The cost of finished goods produced, which means now we will need to work back. Then the closing stock will become our balancing figure. So this is what I spoke about earlier, where you possibly first need to solve the finished goods stock before I can finish the production cost statement. What can also happen? They can give you the figures, or you would be possible to work out those figures, and the balancing figure is the work in process in the beginning. What I actually want to point out, in your production cost statement, any of that can be a balancing figure. It goes about, again, filling in the information which you've got, find the missing information. Again, the same as with reconciliation, show your calculations in brackets to earn part marks. If I now look at, if a transaction is given, a common mistake is we take the totals from the information given and we divide it into the different cost accounts. No. Always do the adjustment first. Then we close it off to the different cost accounts. So if we look at an example here, I've got rent expense. The sales department, they said, is 154,000. Now our accounting period ends 31 July 2021. In this adjustment, rent is apportioned in the ratio 3:2 between the factory and the sales department respectively. Rent for sales department has been paid up to 30 June. red light. Why? Our counting period ends 31 July. That is 30 June. It means 1 month is outstanding. While the factory has been paid in full. So how do we approach this? Number one, we first do the adjustment. So we need to find out what is the monthly rent. So we divide it by 11 to find out the total rent for the sales department for 12 months. And once we've got that, we can now divide it into the different departments. Please, please, please don't now take that total, 168,000, and times it by 5, divide it by 3, and leave it as that. That is a common mistake. Why? This 168,000 represents the money spent in the sales department, which is equal to 2. So I just simply need to times that by 3 to know what will go into the factory department. Right, moving on. If we look at labor cost, it's always, as mentioned before, gross plus the contributions. But now, what happens if there is overtime? When we calculate contributions, it is on the basic wage. But you need to look at the instructions. Here's an extract of 2 past exam papers. In the first one, they specifically said to you, it must be calculated on the basic wage. This means I need to exclude the overtime. So when we calculate, we're going to calculate the basic plus the overtime. That equals my gross. But when we look at the contributions, it is calculated on the basic, which is 384,000. If we look at the next example, they specifically said to you, it must be on the gross wage. This means I need to include the overtime. Make sure that you read your instructions. So if I look at this now, I'm going to take the basic wage plus overtime, and then we calculate the contributions. It will be on the gross and not the basics. This is a question which they love asking. Direct labor cost. Make sure that you familiarize yourself with this. Now, a term, economies of scales, which is sometimes foreign to learners. What does economies of scales mean? If I look at factory overhead cost, that equals my fixed cost. So in an exam, it can happen that my total fixed cost increase. And then you look at the fixed cost per unit and, well, but that's a decrease. Why is that? This is what we call economies of scales. So if I look at this, my fixed cost divided by the number of units is 100 Rand per unit. If that increases now, my fixed cost and my number of units produced, look what happened to the fixed cost per unit. It actually decreased. And why was that? Because the number of units that we produced was more. And this is what we call economies of scales. Make sure that you familiarize yourself with that. So when you look at an exam paper and you see the fixed cost increase and the fixed cost per unit decrease, it's not a mistake. This is what we call economies of scale. Looking now at different types of problems in manufacturing business, make sure problem solving, always quote figures, compare with percentages. Be very careful. If they give you a question, identify one variable cost of each product that was not well controlled. And then they said, note, the inflation rate is 6%. Don't just go and say, oh, well, okay, direct material cost, direct labor cost, selling and distribution, all of them is applicable. You're going to get it wrong. What do? We work out the percentages and then we identify which of those is more than 6%. This is your correct answer then to use, the direct material and the direct labor. Looking now at budgets. Budgets is nothing new to grade 12 learners. So when we're looking at budgets, what is important? Know your format. Know the difference between a cash budget and a projected income statement. Number one, it's on a monthly basis. And number two, cash items only, cash budget. Non-cash items will appear in a projected income statement. When we look at a cash budget, it is my expected bank balance, expected receipts, expected payments, expected deficit or surplus. But when we look at a projected income statement on a monthly basis, it is our expected net profit, expected income and expenses. Do you notice the word expected? That's what we expect to happen. So budgets is all about planning for the future. Debtors collection and creditors payment period, you've done in grade 11 as well. So in grade 12, you can expect that it will be asked a little bit more challenging. So I always say, when you complete a debtors collection period, know how to calculate it from the beginning to the end, but from the end to the beginning as well. Because what if they provide you with the payments from debtors and you need to find out the credit sales, or you need to find out the cash sales from there? Or they can provide you with the figures and you need to find out what is the percentages. So when you practice that, a simple activity from the beginning to the end, and then work it out from the end to the beginning. Creditors payment is always calculated on your cost of sales, and cost of sales is calculated on your total sales. Make sure you know the simple calculations how to calculate cost of sales. Why cost of sales? Because the goods that we sold will need to be replaced. If I now look at comparing actual figures and budgeted figures, it is easy but not that easy. Why? You need to first identify if the business overspent or underspent. Read the information carefully. Be aware when asked to justify if we overspent, to justify why we overspend. So what do I mean by this is, don't just look at advertising per se and say, well, we overspent. Look in context, and here's an example now. You are required to look at the advertising and see how did that affect the sales. So very important. When you look at information given, there's a reason why they gave you the information. So there's my advertising, and if I look at the cash budget, it is clear. When we budgeted that our advertising will increase from 12,000 to 30,000. So we've budgeted it will increase with 150%. But now if we look at actual figures and what we've budgeted 30,000, but we spent 42,000. So we've overspent. But now let's go even further. If we look at the number of customers, you would notice, okay, but the number of customers increased from 110 to 135 customers. So maybe that's why the advertising we overspent while the number of customers increased. But now look even further. If I go look at sales, but the sales actually decreased. So make sure that you comment on the figures and look at it in a general overall picture. There's a reason why they've given you as well the expected average sales per customer and what is our expected customers from March up to May. So here you can see that yes, our customers did increase, but if we look at their buying power, it decreased from 7,000 to 5,000 111. If I look even further and I compare the sales with the fee income, I could see that more customers would prefer repairing than buying, because my sales decreased, but my repair services, my fee income, actually increased. Another example, if we look at consumables. If I just look at consumables, well, we overspent. It means not well controlled. Not true. The consumables is linked, connected to the fee income. My fee income increased. So if my fee income increased, it means that my consumables should increase as well. So if we now look at that percentages-wise, we can see that my fee income increased by 31.4%. If I work out the percentage consumables on repairs, there's actually a decrease. This tells me that we controlled the consumables well. So again, don't just look at consumables and say, but we have overspent, and that is now a problem. If I now go to calculations in budgets, this is important. They love asking this question. For example, the loan amount increased. Simple way to get to the answer, we take the difference and we solve X. X becomes the loan amount. A common mistake, it must be 1 divided by 12. We do not take that 1 divided by 12 and then we completely mess up this calculation. Budget is on a monthly basis, so make sure that your calculation is 1 divided by 12. So there is my loan amount with how much it increased. I could ask you exactly the same question and just swap it around and say, with how much did the loan decrease? If we also look at, they can provide you with the loan installment, including interest, and you need to find the interest amount. So when we look at this, remember, the loan is equal to 100%. If interest is 6%, it means if I want to calculate the interest, we have to say times 6 divided by 106. If we look at fixed assets, I'm not going to go into detail with fixed assets. This is incorporated in paper 2 as well as paper 1. Be aware, paper 2 goes about internal control, movement of trading stock, be possibly problem-solving questions here. So make sure that you study fixed assets with paper 2 as well. Common mistakes with fixed assets is how to calculate the alt or the remaining, especially if there's asset disposal involved. Always check, does the total, if I calculate depreciation and I add it to my accumulated depreciation, will it exceed the cost? Because that is a problem. It can never be a zero or negative amount. So when that happens, your carrying value should be 1. So how do we get that 1? We simply take, to find out the depreciation for that year, we simply take the book value in the beginning and we minus 1 from that. And that will give us the book value, the depreciation for the year. Looking at the last topic, inventories. What is expected with inventories, and I've already touched a lot on this, you need to know perpetual and periodic inventory system, and within those two systems, how we evaluate our stock. Now here is a summary of the type of questions you can expect with regards to inventories. Now this is one of those questions in an exam where unfortunately if you leave out the first question, it can have a ripple effect. Because I will need to use answers in previous questions to answer the next question. So make sure that you write something, attempt at least something, and use that answer, even if it's incorrect. If you use it in the correct way, you can earn marks. So if I look at the periodic and perpetual inventory system. Within these two, we need to evaluate our stock either using specific identification, FIFO, or weighted average. Note, as mentioned before, and I've shown you examples, it can be incorporated into different topics, even with paper 1 when we do financial statements. Study the characteristics of each. You will need to provide an opinion which method is suited for that specific business. A common question asked is, the owner wants to change from FIFO to weighted average or from weighted average to FIFO. So if you just look at this, how does that affect the gross profit? In FIFO, we would have a higher gross profit. Why? Because the value of our closing stock is higher because we value our stock at the most recent prices. If we look at weighted average, we use an average price, which means the value of your closing stock will be lower. Your cost of sales is more. So think about it. If your cost of sales is more, your gross profit is going to be less. So why can't I just change from one system to another? Because how am I going to compare 1 year from another if I changes from FIFO to weighted average? Another reason is you can manipulate the figures. If I want potential investors, I want my gross profit to be higher. If I want to pay less money to SARS, I want my gross profit to reflect lower. So we can't just chop and change. We need actually permission from SARS if we want to change from weighing our stock using FIFO to weighted average. This is a question asked commonly. If I look at calculating missing stock, to calculate our missing stock, we always look at what is our stock available and we compare that to what we physically counted. If there is a difference, that will indicate to us if stock is missing. So in this example, we should have 760 available, but according to the physical stock count, we only have 270 units. There's a difference. That difference means that there is stock missing. Remember in the beginning I said financial indicators can be incorporated. This is an example where they use the stock holding period, but the question specifically said closing stock. If you use the closing stock, you need to use the balance at the end. If they just said calculate the stock holding period and we need to use the average, we always take beginning plus end divided by 2. So this answer, you can use different methods. We can use the units. So if we use the units and we look at the cost of sales, we are going to take the closing stock balance and we divide it by the cost of sales, which we've just calculated. Or we can use the sales, and we look at the total number of units left over is 270, divided by the number of units sold, 2,180. And remember, stock holding period, your answer must be in days. Now notice, it's different answers, but both is acceptable because there's different methods in how we can get to the answer. You could also use the totals. Now, problem solving. Problem solving is a problem for many learners. Some attempt it and some just say, oh, let's see if we get to that. It's actually not that difficult. I always say, there's a reason why they provided you with the information. If I look at this example where we look at inventories, we can look for things like missing stock, missing money. How long do we keep our stock? With problem solvings, identify a problem, potential problem, and circle it. And then we're going to look at ways in how we can prevent that or improve the situation. So if I look at this now, the first one, I've got missing stock. Again, we look at available stock minus our sales, and we compare that to the physical stock balance. Here it is clear that the gym towels, we've got 110 missing. Now we look at the missing money. So to find the missing money, I've got the selling price per unit. I've got the sales in units for the year. So I first need to find out my total sales for the year. And then I'm going to compare that with the cash deposited. And there you can see there's a problem with the golf caps. There is 5,000 missing. That is a problem. If I look at the stock holding period, we take, or the percentage sales, we take the sales in units and we divide it by the number of units available. So now we can see what percentage did we sell, what percentage did we keep. So if I look at this and I compare, it's clear that the t-shirts has the lowest percentage sales, the highest percentage stock which they keep, and the stock on hand is the most days. That is a potential problem. So now you've identified a problem with each, and now we can comment on that, quote the figures, and then give advice. This brings us to the end of our session on paper 2. I hope you've learned a lot. Just some tips. This is like accounting. It's like a race that you need to get fit for. So you need to make sure that you practice every single day to keep fit. Do not study a day before the time for hours and hours and hours. It's going to go to waste because you're going to be tired when you write that exam. You've done the prep before the time. Secondly, when you get to that exam paper, the exam venue, ignore everybody around you. Focus on your exam, and that is it. Because if you're going to start going into discussions with people, you might start second-guessing yourself. So make sure you ignore everybody else. When you get your paper, you take the first 10 minutes and you read your answer booklet. Familiarize yourself with the paper. And then when you start, you don't need to start with question 1. You know your strengths and your weaknesses, so start with the questions that you answer well first. And then you go on to the questions which you find a bit more challenging. And then always keep to the prescribed time. Make sure you have a watch next to you, and if it says 20 minutes, that's it, and then you move on. You don't want to get to a point where you rush through the paper and you're chucking away marks because you couldn't finish the rest of the questions. Okay, in accounting, you need to learn on to move on if you're not sure. Thank you very much. Good luck with the exams.